Everyone dreams of owning their own home. But what if the biggest decision isn't the house itself, but how you pay for it? Hi, my name is Diane. I'm 31 years old and I live in Washington with my husband, Daniel. We've been married for a few years now. We don't have kids yet, but we often talk about starting a family someday. Daniel and I first met at the company where we both used to work. He was in the IT department, and I was part of the marketing team. We worked on a few projects together, and before we even realized it, we became more than just coworkers. After getting married, we both decided to make a fresh start in Washington. It felt like a bold step. New city, new opportunities, new beginnings. I found a marketing position at a mid-sized agency downtown, while Daniel joined a tech firm that develops cloud-based solutions for small businesses. We both love what we do, but starting over in a new place isn't always easy. We had to find a new apartment, build new friendships, and most importantly, plan our finances carefully. Everything in Washington seemed more expensive than where we came from, especially housing. During weekends, Daniel and I love exploring our new city. We visit cozy coffee shops hidden in small streets, try local bakeries, watch movies at independent theaters, and sometimes just take long walks around the park with our favorite drinks. Those little moments remind us why we chose this place. It feels alive, full of stories waiting to be discovered. But deep down, both of us share a dream of owning a home of our own. Right now, we're renting a small but cozy one-bedroom apartment. It's nothing fancy, but it's filled with warmth. Our laughter, our weekend breakfasts, our movie nights. Still, like many young couples, we dream of a house that's truly ours. A place where we could paint the walls any color we want, plant a small garden, and one day, maybe, raise a child. The problem? Housing prices in Washington are far from friendly. We spent months searching online, visiting open houses, and talking to real estate agents. The more we looked, the more we realized that buying a house wasn't just about finding a beautiful one. It's about making one of the biggest financial decisions of our lives. That's when the big question appeared. Should we get a loan from a bank, or should we consider a finance company? At first, it seemed like a simple choice. But the deeper we looked, the more complicated it became. Let me break it down for you the way we did for ourselves. A bank is a traditional financial institution. They usually offer lower interest rates, more stability, and long-term support, but the requirements are strict. You need solid income, good credit history, and lots of paperwork. A finance company, on the other hand, is more flexible. They often approve loans faster, require fewer documents, and are more open to people who might not qualify for a bank loan. But of course, there's a catch. The interest rates are higher, and there might be hidden fees if you're not careful. So we listed out the pros and cons. Bank, pros, lower and more stable interest rates. Long-term support and credibility, ideal for those with stable income and good credit. Bank, cons, complicated paperwork, long approval times. Harder to qualify if your credit score isn't strong. Finance company, pros, easier to apply. Quick approval, flexible requirements. Finance company, cons, higher interest, potential hidden fees, higher risk of debt if you don't plan well. It sounded simple on paper, but when you're the one signing the loan that will follow you for decades, every detail matters. One night, while scrolling through Facebook, I came across a post by a woman named Lisa. She had recently bought a house and was sharing her experience. Her story really made me think. Lisa had chosen to go with a bank. She had a stable job and a strong credit score, which made her eligible for a lower interest rate. Thanks to that, she saved over $200 every month compared to what she would have paid with a finance company. But it wasn't easy. The process took almost 2 months. The bank asked for countless documents, income proof, tax returns, bank statements, and they did a very detailed credit check. Lisa said it was tiring and stressful, but when everything was finally approved, she felt secure. Her loan had a fixed interest rate, so she didn't have to worry about it rising in the future. Her final words in that post stuck with me. It was hard work, but now I sleep peacefully knowing I made the right decision. Of course, we also had to look at the finance company option more seriously. They were advertising everywhere. Fast approval, no hassle, flexible income requirements. And to be fair, their process sounded very tempting. No mountains of paperwork, no long waiting times. For people who needed money fast, it was a great option. But then we started hearing the other side of the story. One of Daniel's coworkers, Kevin, had recently gone through this exact situation. Kevin's wife was expecting their first baby, and their lease was about to expire. They needed a home urgently. But Kevin's credit score wasn't strong enough for a bank loan, so he decided to go with a finance company. The loan was approved in just 3 days, quick and easy. Kevin was thrilled. But after a few months, he began to notice things he hadn't paid much attention to at the start. The interest rate was 3% higher than what a bank would have offered. There were extra fees, processing fees, service fees that weren't clear in the beginning. Every month, Kevin ended up paying around $400 more than he expected. He admitted that if he had spent more time comparing options, he might have chosen differently. Now, that extra payment was putting pressure on their growing family's budget. After hearing these stories, Daniel and I were torn. We spent many nights sitting at the kitchen table, running numbers on spreadsheets, scribbling notes, and asking ourselves, what can we truly afford? What's more important, speed or stability? We compared actual figures. Bank, 6% annual interest, $1,600 month. Finance company, 9% annual interest, $900 month. That's a difference of $300 per month or $3,600 per year. Over 10 years, that's $36,000, the cost of a brand new car. We realized this wasn't just about monthly payments, it was about our future. We decided to pause and take a hard look at our own situation. What we had: stable jobs and regular income. No large debts, good credit scores, a decent amount of savings for a down payment. What we lacked: we were still new to Washington with a short income history here. Some monthly expenses were still fluctuating. We needed time to prepare more documents for a bank loan. After weighing everything, we concluded that while a finance company might be faster, a bank loan would be smarter in the long run. We didn't want to rush into a decision just because it was easy. We wanted a choice that would protect our future. So we made up our minds. We'd go through the harder process and apply for a bank loan. The next 2 months were exhausting. We gathered every document the bank asked for: pay stubs, tax forms, employment letters, credit reports. We had meetings, phone calls, and more than a few moments of frustration. But we kept reminding ourselves, this is our dream. It's worth it. And finally, the call came. Our loan was approved. A few weeks later, we stood together in front of a little 2-bedroom house in a quiet neighborhood, holding the keys in our hands. It wasn't huge, but it was ours. The walls smelled of fresh paint, and the empty rooms echoed with possibility. We spent the first night sleeping on a mattress in the living room, surrounded by boxes, eating takeout, and laughing about how surreal it all felt. That night, I remember looking at Daniel and whispering, "We did it." And he smiled. Yes, and we did it the right way. Looking back, I'm grateful we took the longer road. The bank loan gave us peace of mind and stability. Our monthly payments are predictable, and we can plan our future without worrying about sudden rate increases. So if you're in the same position as we were, here's my advice. If you have a stable income and decent credit, go with the bank. The process might be longer, but the lower interest rate and reliability are worth it. If you need money fast and don't qualify for a bank loan, a finance company can be a temporary option, but read every line of the contract and make sure you can handle the higher costs. Buying a home isn't just about getting a house, it's about building a life. And for us, choosing the bank loan wasn't just a financial decision. It was a promise to our future selves. Today, as I sip coffee in our own kitchen, I feel a quiet joy. It wasn't easy, but every bit of effort brought us here, to a place we can finally call home. Thank you for listening to my story. If you're also on your home buying journey or still deciding between a bank loan and a finance company, feel free to share your thoughts in the comments below. Don't forget to like this video, share it with anyone who's planning to buy a home, and subscribe to the channel so we can keep learning more smart financial tips together every week.